bring on board the management of a Bank of India. And to talk about their numbers, we do have Rajneesh Karnatak, Managing Director, as well as the CEO of the company joining in with us. Thank you so much, sir, for joining in with us this afternoon on ET Now. Sir, looking at your numbers, what we want to start by talking about is the net interest margins. They've seen an improvement, and this is despite what we're seeing in at the pressure that is coming in at an industry level. What are the factors that are playing out for your bank, and what is the outlook on NIMs going forward?
Yeah, so as far as net interest margins are concerned, if you see our trajectory on the net interest margins, so we have shown 3.07 as our NIM for this quarter. The March NIM was at around 2.92, and the June 23 NIM was at also at 3.02. So we have improved our NIM in this quarter definitely, and because of the main reason for that is the cost of deposits have gone up by 60 basis point, but our yield on advances have also gone up by 50 basis point. So 860 is our yield on advances, and the gap between the cost of deposit and yield on advances is a good 3.68%. So the NIM is translating into 3.07. So good margins are there as far as our credit growth is concerned through the credit growth, because we are lending, not lending on the repo rate side, and we are trying to lend on the MCLR side, where our lowest MCLR is the overnight MCLR at 8.15%. So that is one reason. And the other reason is that there was one lumpy recovery on the NPA side, where the recovery had gone into the interest income for the bank. So that also contributed to the improvement in the net interest margin at 3.07. But the trajectory is that we have been improving our net interest margins on a quarter-on-quarter basis, and now it has come to 3.07%.
Right. Mr. Karnatak, also tell us that the non-core income was a little lower this quarter, which was impacted by the PPOP growth on a year-on-year basis, if I'm not wrong. Do you think that the non-core income will pick up from here on or remain lower?
Our slide in the presentation, though it is showing a reducing number, but however, let me clarify that the Q1 FY23 March, this one June 23 numbers, there was a 470 crores of income tax refund in that. So because of that, the quarter income was elevated. So if we remove that and net it off, in fact, we have grown our non-interest incomes, and it has grown by nearly 12 to 13%. As against the negative which is being shown in the slide because of one single entry of income tax refund in the June 23 quarter.
Okay. Mr. Karnatak, let's talk about your deposit. That's growth was around 10%, which is lagging to the strong advance growth that one has seen of 15% during the quarter. There seems like there's a stress in terms of deposit growth, especially coming in from the CASA side across industries. Could the CD ratio for you, which is when you're looking at a 76%, do you think this may actually inch up towards the 80% this year?
Yeah, you are right when you say that our deposit growth has been slow in comparison to the credit growth. If you see on the domestic side, our credit has grown by around 17% and deposit has grown at around 9.9%. On the global book side, you can see that our credit growth is around 15% and deposit growth is at around 9.7% odd. But let me clarify here, on a sequential basis, on a quarter basis, our deposit growth has been higher, both in percentage terms and also in amount wise, over the credit growth on a sequential basis. If you see from March 24 to June 24, yes, on a year-on-year basis, the deposit growth has been outpaced by the credit growth. But we have taken certain other strategies to bridge this gap which is there. And the strategy, one of them was that we raised CDs from the market. Another was that during the year, we also had a QIP of 4,500 crore. Then we had a tier 2 bond also of 2,000 crore. Then we are also borrowing from some of the financial institutions at lower rates. And also the excess SLR, we are also targeting for borrowing. So we are seeing other avenues also for improving that. And the present CD ratio of 78% around, we will be able to maintain it through various things. And lot of other strategies for raising resources we have already put in place, which includes we have now 82 officers who are looking only after resources side in the bank. Apart from that, certain branches we have identified in the bank, which will be only resources branches in the bank, and their entire KRA of the staff would be on raising of the deposits, both on CASA side and the bulk side. And lot of other digital journeys we are starting on the liability side. And also tie-ups we are now doing with schools and hospitals, education institutes, corporates, state and central PSUs. All these strategies will definitely bring together more of liability side. And in fact, for Bank of India, if I may clarify, we have bulk deposit of only 14% in our domestic book. Remaining 86% is CASA and retail term deposit. So we have a very strong franchise, and we do not foresee any much of a challenge. Some challenges already there, but definitely as far as the pacing with the credit growth is concerned, we'll be able to pace it and maintain the CD ratios within the levels which are prescribed by RBI.
But Mr. Karnatak, the RBI is also being cautious with the LCR ratio. Now, with the new draft circular, what's your internal assessment in terms of the impact on your LCR ratio?
So draft circular of RBI has come on 25th of July. So we have to submit our feedback and suggestions by 31st of August. That we'll be doing it to RBI and also through IABA to the RBI. That is one part. It will get implemented from 1st April 25. We have done our ballpark calculation. According to our estimate, the impact would be on the LCR to the extent of 10 to 15%. That would be impact. Overall impact, definitely it will impact the net interest margins on the ongoing basis, because bank will have to park more on the SLR securities and other things, and the challenge for retail deposits will also go up, and the costing may go up. So that is one of the reasons that we are saying that the NIM, we may not be able to keep the NIM at 3.07, and it would be shaped to 3%.
One concern, that is shaping up, seems like a lot of noise, is that there is stress around MSMEs. And this segment actually contributed to additional slippages for you during this quarter as well. Could you highlight in terms of, do you see any stressed regions for your books from the MSME side, or any other book, if you could give us an indication there?
So as regards our asset quality is concerned, see, if you see our gross NPA and net NPA are coming down. So gross NPA book is now 27,000 crore odd, and the net NPA book is around 5,700 crore. If I talk in percentage terms, sequentially our gross NPA is coming down. So presently it is at 4.62% only, and it has come down by 2 percentage points on a YOY basis. Now, if you see our net NPA, for the first time, the net NPA has come down below 1%, and sequentially again this number is coming down. Overall slippage ratio is also less at 0.35% only in this quarter, and sequentially again this is coming down. Credit cost, though it is a bit higher because of in the sense that it is also coming down, but in this quarter we also made some provisions as a matter of prudence. And if you see our PCR ratio, it is 92% plus now. As regards the stress, we are seeing, stress is there in agriculture and MSME both, but we don't see it much of a challenge, because these are normal NPAs which happened during the quarter in the bank with the kind of portfolio that we have and the way it is going. So no specific segment is there where there is a challenge, but overall there may be small normal slippages both in retail, agriculture and MSME, and corporate we don't see a potential any account slipping.
Right. Also, Mr. Karnatak, tell us the credit growth guidance of 13 to 14%, whereas the actual growth this quarter was 15%. So is it a cautious call to keep the growth outlook lower?
Yeah, we have given a cautious call for this fact that sources are a challenge these days, and we want to protect our NIM. So top line is important, but bottom line is equally important. So in order to protect the NIM and the net interest income also, though we have grown our net interest income by 6%, and the interest earned there was also increased by around 16 percentage points. But we feel that we need to protect our margins. And if there is a challenge on the resources side, definitely we'll have to take care of the credit growth also, though there are other strategies also. So that is the reason why we have kept a very guidance of around 30 to 40% on the global credit growth and around 10 to 11% on the deposit side. So, but we will definitely review this position once 30th September is over.
Okay, thank you so much, Mr. Karnatak, for joining in with us this afternoon on ET Now and talking about the NIMs, the GNPAs of Bank of India and the outlook going forward. But